speaking of midterms, Martin, I do want to move there. Have the markets been given any more clarity or stability since we last spoke yesterday? I feel as if there's somehow still more we don't know than we do know.
That's how it feels to me as well, JD. It's hard to pick through it at the moment because, of course, you had the crypto disruption that emerged early in the week and is ongoing. And now we've got the CPI data that has muddied the picture a little bit. But my suspicion is that from the political perspective, markets aren't going to be comforted until they understand what the result of the runoff in Georgia will be on the 6th of December, because, of course, both parties are going to marshal all of their resources towards that singular race. And that is going to be interesting to see actually who comes to the fore to defend Herschel Walker, the Republican candidate, and whether or not former President Donald Trump is prepared to sort of campaign on his behalf, given the fact that it looks like a lot of the candidates that he backed performed very poorly in the elections on Tuesday. So those machinations aside, really until markets can understand exactly what the composition of the Senate will be, they probably aren't going to change their perceptions in terms of what happens with this divided government, particularly now that they are pretty much settled on the fact that the Republicans will have the narrow majority that they anticipated in the House, barring some really unforeseen circumstances.
Of course, James Carville, as part of the Clinton campaign, famously said it's the economy, stupid, and yet numbers nationwide don't show, Martin, the red wave, let alone a red tsunami that many had predicted. Is it too early for a bit of a postmortem about why perhaps the economy maybe wasn't the sticky factor that it traditionally is, especially for midterms?
That's a really great question, and I was surprised at that myself, because from what I have seen in terms of the results, at least the ones that we know, this is one of the best performances for a sitting government since 2002, at least with respect to midterm results. So it does say something about the administration's ability to marshal some of its activities over the summertime with the Inflation Reduction Act, with the release of crude from the Strategic Petroleum Reserve in order to bring down gas prices, and a couple of other things. But from a purely political perspective, JD, it appears to me from exit polling and from commentary from pundits whom I respect, abortion was one of the most significant issues for a lot of voter turnout across the country. And it was an issue that brought a lot of Democrats to the polls and in some ways snuffed out this anticipated Republican wave. So to some degree, it almost felt as if the economy was neutralized by both Democratic activity over the summertime and, of course, the toppling of Roe v. Wade earlier in the year. And that allowed that purely political perspective to come to the fore in the polls on Tuesday.
Martin, I'm hoping we can shift the conversation just a bit and talk a little bit more Elon Musk's Twitter, because there was a bit of news that was made at the president's press conference yesterday. I think even the fact that Biden had a press conference means he knew he had, as we say in politics, the big momentum, right? It was probably a much better showing for Democrats, because I didn't think Biden was going to come out on election day. I was like, there's no way he does a presser tomorrow, but he did. And he was asked about CFIUS, so not really, but the specific government investigations. Specifically, if CFIUS should investigate Elon Musk's takeover of Twitter, given that the foreign-linked co-investment commitments of that company came about as a result of ties to governments like Saudi Arabia and the UAE. It's small funded in the big picture, but they are players there. And I'm curious if you have thoughts about whether or not you think CFIUS is likely to take a closer look at this.
Well, that was the reporting that came out a couple of weeks ago, wasn't it, JD, that CFIUS was going to look at the fact that there was, of course, some foreign money inside the broader equity commitment that was put forth by Elon Musk to purchase Twitter. And I do think that's interesting, particularly when also you sort of, parallel that with the relationship that Elon Musk has been able to cultivate with lawmakers in Beijing as well, given the fact that his Shanghai factory is such an important component to protection for Tesla, for deliveries for Tesla, and indeed for the broader growth of that company in international markets. It's been a quiet story with respect to Tesla, the way that it is hinged upon these gains in Shanghai and indeed the broader Chinese economy itself. And I think now people are sort of understanding that, and again, I'm not suggesting there's anything nefarious, but nonetheless, when you do have bedfellows like that, people are going to raise questions, particularly when you are beginning and obviously executing the purchase of an enormously influential social media company. It has to be remembered, of course, that virtually all of indications and the security services here in the United States have agreed that social media was used to influence the 2016 election vis-a-vis Facebook. TikTok, a very enormously influential social media app, is of course run by China-based investors, and there's enormous discussion right now as to whether that's appropriate for the U.S. economy, and indeed whether that app is going to survive in its current form. So I think what the president was saying is probably not misaligned with discussions that are being held already about social media influence. And when you add the fact that there is Saudi money involved, that there's obviously a link to China, both from an investor base and from a company perspective when it comes to Tesla, it doesn't surprise me that the president said what he said.
Right, because a lot of these concerns are who are the end people who end up having access to the user data? What countries might end up having access to all the other things on our phones? We're scrolling through TikTok or, in this case, using Twitter. CFIUS rarely takes the dramatic step of making a recommendation, but that is what they could do, right? They can make a formal recommendation to the president that a deal be outright terminated. It doesn't happen often, but from time to time. But if it can, it determines that a deal has significant risk to national security. But Martin, if I'm not mistaken, an investigation like this would still take some, well, I mean, we're talking about quite some time. I mean, there are set timetables for how they would go about looking at this, right?
Yeah, we'd be well into 2023 before we even heard anything, and CFIUS isn't going to comment prior to that. So it could be a while, and quite honestly, by then, who actually knows what form Twitter is going to take under the tenureship of Elon Musk? He's already made and backed away from several promises with respect to how he sees the company performing under its new guise. And we just don't know if it will have the same influence or indeed collect the data that it used to in the past. So I think, I mean, put it this way, JD, we're not hearing a great deal of discussion about bots and fake accounts anymore, are we? We're talking about monetization and the way in which to moderate content. I mean, the change in tact from Musk has been spectacular on that regard. So I do think it would take some time. I'd be terribly surprised if the deal were to be unwound, given the fact that we've got this far. But maybe CFIUS would think to itself sometime next year that ultimately Twitter under Elon Musk might not necessarily pose the same kind of risk that it did prior to his purchase.
No, but it was kind of a disaster zone with regards to the rollout of Twitter Blue. Did you catch all like the fake sports tweets that were going viral because people bought Blue verification badges for $8? They would make like a fake Adam Schefter account that would tweet this wild sports news that would get pickup, and people wouldn't realize that you can now buy a verification badge, create this fake looking account. Yeah. They eventually got taken down, but it was a very weird afternoon in sports Twitter as people were like, well, we can quickly exploit how this isn't going to work. So we'll see how that story goes.
This is the issue,
yeah,
JD. I mean, they turned out to be badges, but not verification badges. So what was the point of that? I mean, ultimately, if it's simply just about putting Twitter behind a paywall, that's one thing. But to sort of tout the fact that you're selling these badges as a way in which to differentiate fake and real accounts, it was a spectacular failure. And really, does it give investors any confidence if they were to be asked to support this platform going forward, that the man in charge knows what he's doing? I mean, the early indications are no.
Yeah, it's going to be a story we all follow very closely. And by the way, I mean, what a week to roll out new shaky content moderation. I mean, we're in the middle of an election. Are you kidding me? Like, what's to stop someone from creating a fake profile with an $8 badge and saying, oh, I won the election? Okay, we could do this. I could do this conversation all day. But I do want to get your take on Binance, because what an incredibly important story here, Martin. That company backing out of its FTX rescue. Suddenly FTX facing the prospect of near-term bankruptcy. I mean, it was all good just a week ago. Give us an update about how that story has progressed, even just since yesterday, Martin.
Really, even in the last 20 or 30 minutes, JD, we've seen some tweets from Sam Bankman-Fried, of course, the founder of FTX and FTX.com. That's the international division of the crypto exchange, which indeed is one of the largest. There's multiple reports that say that FTX.com, at least, the international version, is teetering on the edge of bankruptcy. It's unclear what jurisdiction any bankruptcy protection would be sought. Certainly wouldn't be in the United States. And Bankman-Fried himself says that, well, the assets of the U.S. division are fine. That's a word he's used in the past, though, so it all needs to be taken with a grain of salt. And I don't like to say that when it comes to the pronouncements of company bosses, but we really do not know what to believe, whether these statements are made on Twitter, whether they're made in real time. What they are not made, JD, is under the guise of either protected language inside the sort of guidance of legal counsel, or statements that are made to filings towards regulatory officials. in those instances, I think we'd be happy to believe what they say. Simply going on Twitter and saying that your assets is fine is absolutely unsatisfactory. And really, I don't think investors are buying it. But it comes down to this, JD. There appears to be a commingling of funds that allowed depositors' cash to be used for other investments. And that's exactly what is not supposed to be happening, particularly in an unregulated exchange that doesn't have the kind of depositor protection that investors would find in a regular bank. And I think now many investors are waking up to the risks that they face when they put their cash into these projects, because they don't have the regulatory protection, they don't have the deposit protection, and really the promises that they're getting from the men and women that run these companies aren't really worth the paper they're written upon. And that's why you're seeing deleveraging across the board, selling in tokens of all description across the crypto space. You are seeing an increase this morning in Bitcoin, but that's almost entirely linked to the CPI data. And I'm certain that that rally is going to fade in the coming days as more of those tokens are sold to pay for some of the losses in the FTX platform and elsewhere. This story has a long way to go, and the ripple effects it's having through this nascent business are significant.
I mean, what's amazing to me is for the average, everyday, let's say, American who maybe doesn't follow the crypto space very closely, but that American might watch professional sports, specifically Major League Baseball. And if you have, you'll notice that all the umpires in Major League Baseball wear these FTX ads. You've probably seen Tom Brady's commercials and his partnerships with FTX. How is the average person on the outside, who maybe already has a fair dose of skepticism about the world of cryptocurrency, now supposed to think when they're like, well, I don't really know what FTX is or what it does. I see it. I know that it's a major sponsorship player for sports. And now you're telling me that it's going from visual ubiquity to now facing a reported investigation from the DOJ.
It's not dissimilar to what we saw with Enron, is it, JD? I mean, that name was emblazoned upon sports stadia around the United States as well. And of course, it fell spectacularly and with great legal ramifications as well. Those branding exercises are designed to do exactly what you have sort of indicated, and that's to establish a presence in the mind of customers of sort of probity, of safety, of sort of establishment. And that's exactly what they did to a degree, because FTX was able to draw in billions and billions in customer funds onto that trading platform. Now, there does appear to be some of the commingling that I discussed, in where those billions of deposits were used in reference to investments outside of the platform and without specific permission. And that is really the biggest issue that the companies and the investors face right now. Furthermore, a lot of the people who are on that platform from a deposit point of view are going to find themselves at the back of the queue in any bankruptcy proceeding, because they will be seen as depositors and not necessarily creditors. So again, a lot to unravel, but I think your point is a good one. When companies do establish that sort of branding mentality that indicates the kind of probity and safety that we would associate with banks, they have to deliver. And clearly that's not happening right now.
Yeah, how concerning is the collapse for crypto investors more broadly, maybe even people, Martin, who casually put some money into, one platform or another? Maybe they're not even directly tied with FTX, but they've learned more about the crypto space, they've invested some money, and they're sitting there and saying, what might be the ramifications for all of us?
Ultimately, JD, and I hate saying this because I don't want to elicit the blowback of some of the more sort of vocal people in the crypto space, but it simply has to be said in these stark terms. These are not investments. They are gambling. They are gaming. You are taking a risk that could see you lose all of your money in a single go. It is really not that different to Powerball. We all had a lot of fun watching the principals rise in the Powerball draw up to somewhere around 1.9 billion US dollars. But people go into that understanding that if they buy $50 worth of tickets, there's a good chance that they're saying goodbye to $50. Because of the sort of, again, the branding exercises and the PR movements and everything else like that, people have been led to believe that putting their money into these crypto exchanges and the broader crypto world in general is part of an investment process. And it simply is not. It is gaming and gambling, and you could lose all of your money as a result, and you have very little redress, to some degree, no redress at all, if and when that were to happen. So I think this is something that, if nothing else that we can pull from this debacle, we can at least echo that message. These are not investments in the traditional sense. You are on your own out there, and the chances of losing your money are extremely high.
Martin, it's now becoming a regular segment on our morning show where I ask you for updates from China overnight. You wrote this morning at TheStreet.com about a new surge in COVID infections, despite that country's very strict COVID protocols. What more have we learned, even since when you and I had this conversation this time yesterday?
Yeah, the numbers are moving in absolutely the wrong direction, JD. Infections in China now are at the highest levels that they have been since April, and they're spreading to further industrial cities around the southeast and in different parts of the country. There were statements today from the Chinese government, which are rare indeed, because normally these things are done sort of through divisions and administrations.
I think we lost Martin's audio there. We're going to work to try and pull him back up. Actually, you know what, folks? I think, unfortunately, I don't know if we're going to be able to get Martin back up there. So we were just talking Apple there, and we will continue. I got you, my man. You hear me?
Are we back?
Let's go. I got you. We were talking
Wonderful.
China, an important point. I didn't want to make sure I lost you on it.
Yeah, I'm not sure where we got cut off, JD, but it's worth mentioning that COVID infections in China now are at the highest levels since they were in April of this year. And the government has essentially doubled down on the zero COVID policy, saying there's going to be no change in the coming months. So that really does suggest that the supply chain disruptions that we've seen, particularly in the tech and electronic space, are going to continue.
Finally, while I have you, speaking of China, let's move quickly and finally here to Apple. Foxconn says the company will adjust production capacity in China to minimize the impact of COVID closures, the conversation we were just having. What should Apple investors, you think, Martin, be considering as you and I are having this conversation somehow 2 weeks to the day before Thanksgiving?
Yes, indeed. I mean, the timing is terrible, really, from an Apple perspective, although it's not going to be significant, I don't think, in terms of the revenue generation or profit, but it will be something to consider when you're looking at forward projections into the first 3 months of next year as well. But Foxconn is the biggest assembler of Apple iPhones in the world. And of course, their plant in the central industrial city has about 200,000 people. It's known as iPhone City, and it's been under strict COVID restrictions for a couple of weeks now. They're trying to operate it in this closed loop, essentially where workers are asked to stay on premises, sleep in dormitories and such, and come back to work the following day in order to make sure that they don't mingle with citizens outside the walls. It's proven reasonably successful, but it's a difficult one to keep going. And Foxconn is going to try and sort of tweak its production process around different facilities to mitigate what is anticipated to be a slowdown. They are going to see flat revenues for the fourth quarter, is Foxconn, but they will probably see a decline in smartphone revenues specifically. Now, given the fact that about 70% of their revenues come from Apple, we can overlay that arithmetically onto what we anticipate in terms of Apple iPhone sales. Apple iPhone production is probably going to suffer by about 3 million units, probably at the high end, the more expensive iPhone 14s and iPhone 14 Pluses. But we don't know what that's going to do to average selling prices around the world and indeed ultimately to the company's bottom line. But if this were to persist, then it would become more of an issue. We can't pick through it today in terms of the stock price, JD, because everything tech is on the rise as a result of this pullback in treasury yields and the CPI data. But it's one we're keeping an eye on for certain.
Absolutely. The great Martin Baccardax, no shortage of busy issues that I throw at you randomly, and you bob and weave like a professional. And a special thanks to all of our producers and the incredible team who got the broadcast off the ground today. Yeah, wax on, wax off. And we get to do it again tomorrow, my friend, for a special Friday edition of the show. Hey, and maybe we'll know who won more elections by tomorrow, but I wouldn't hold my breath. That's going to do it for the Market Open here from the floor of the New York Stock Exchange. Stick with TheStreet.com for more on these and all of the major market stories that matter to you. Whew, we made it. See you tomorrow.